on Commodities Market Update. I'm being joined by Nosike one of the research analysts with Financial Derivatives Company. Good morning, Nosike. Thank you for joining us.
Good morning, Chimese.
Well, we'll start off from the global oil market. OPEC, of course, is meeting today, and we've seen the price of oil in the downward trajectory, Brent coming down in the past couple of weeks. Will this be a catalyst, for OPEC to review its current quota?
Well, I think, yes, it would be one of the reasons, one of the key considerations in OPEC at the OPEC meeting today. OPEC earlier in the week released their monthly market report, and for the second consecutive month, they've lowered the projection or estimate for global oil demand. So at this point in time where they are lowering or easing cuts to output from 9.7 in August to 7.7 in September, they would probably sit down and weigh things. Okay, the global demand picture is dimming, and supply, we are increasing supply. That's not the tactic we want to use at this moment. And the markets are keen on OPEC's response to the seeming supply glut in the market. OPEC would do very well to come out with a united front. We will come out with a statement at the end saying that, look, we would hold on easing production cuts, and we would also ensure very high levels of compliance, especially to the chronic defaulters like Nigeria, the Iraqs. And
well, Nigeria is said to have complied, this time. So
yes.
Either way the meeting, goes today, what would that mean for the country?
For Nigeria, okay, we've deemed to have complied. We cheated on our OPEC output, so we've been punished with compensatory cuts. If you will, Nigeria is supposed to supply lower than its quota of 1.4 million barrels a day. It's for September and October, and would by November. But November these days, November it's more like a long-term outlook, given the events in the oil market. So by November, hopefully, the compliance levels, OPEC as a whole, the market will read at the end of today's meeting. The market will say, okay, OPEC and it's the big players in OPEC, the Saudi Arabias, the UAEs. UAE was reportedly supplying 20% more than its quota. And by the time the markets are seeing that these OPEC members are intent on complying with their agreed quotas and also not easing output cuts as they plan to, I think oil prices would, in the next couple of months, rise back to the mid-40s. May not get to 50 like it did pre-pandemic, but at least the mid-40s.
Now, you have on your burning economic issue as Nigeria oil production recovering by 0.74% in August. Is this uptick in domestic oil production still within the OPEC
it is.
Output cut?
Oh, yes, it is. At this point, Nigeria is I wouldn't say a fringe player, but it's not a powerhouse in OPEC. So you can't be going against, instructions or the directives of OPEC at this point. I mean, it's oil production. Nigeria is more sensitive to production than to price, the oil price level. So now that we have basically complied to quota, the reduction in oil output, the impact on external reserves and the currency as well. But in the next couple of months, that constraint should ease.
All right, the U.S. Federal Reserve yesterday left its interest rates unchanged, and we've seen the dollar, rally across markets since then. What is the direct impact of this on the foreign exchange, Nigeria's foreign exchange market? What will happen to the Naira? Okay.
We've seen the global economy has been awash with liquidity since the Fed lowered its interest rate to near zero. And it's just committed to keeping interest rates at near zero for the next 3 years or even more. It's hoping to get to maximum employment and an average inflation target of about 2%. That could take longer than 3 years. So we expect the global economy to still be awash with liquidity. And if you have the capital flow reversals we had, or they were sparked as soon as the pandemic hit the emerging markets and Nigeria, and the currency volatility and the outflow of FPIs, that should reverse. There should be global investors should maybe if we have some stability with the currency, if we could get the reforms as with the World Bank induced reforms on the currency, which should have some increased inflows to bolster the currency. Then also, if you have, in the long term, in the next year or so, we should have a lower interest rates in the US will lead to a weaker dollar. I mean, the market would have reacted and the dollar strengthening, but over the longer term, it should lead to a weaker dollar. Weaker dollar has a positive impact on commodity prices, which is good for oil prices and even cocoa prices at Nigeria is the biggest spot.
And then we've even seen the external reserve creep up, currently at about $35 billion. Where is the accretion coming from?
I think, in my opinion, that's a blip. I mean, because the depletion, it's a trend right now is a depletion until we get increased accretion from, say, a World Bank loan, where they're still in talks, a 1.5 billion World Bank loan, and we have increased oil production and increased oil prices as well. Then we can see we'll have significant impact on the trend, and we'll see it trend higher, close to 37 billion.
Now, let's look at agri-export. Cocoa is Nigeria's major agri-export, and we've seen heavy rains causing flood, and analysts say this will definitely have some kind of impact on Nigerian cocoa. So how much damage do you think this heavy rain would have on Nigerian cocoa, and how would that impact revenue?
Okay, the heavy rains have been isolated in the southwest parts of Nigeria. The southwest accounts for about 70% of Nigeria's cocoa output. On the one hand, the excessive rainfall now, it's not just heavy rains, it's excessive rainfall. Cocoa doesn't thrive under excessive moisture. So if you have this much rainfall and this much moisture, when you harvest the cocoa, because this is harvest season, if you harvest the cocoa, drying it becomes a problem because of a lack of sunshine. In addition, there's a black pod disease that thrives under extreme moisture, which we have now. So as much as 40% of the entire cocoa output is under threat. So you have those two factors weighing on cocoa supply. Cocoa accounts is our biggest agric export, and it could diminish cocoa output by as much as 40% and have Nigeria's foreign exchange receipts from cocoa.
And we have top cocoa growers, Ivory Coast and Ghana, having hiked farmers' pay and, of course, put new floor price to it. What would that mean for us?
The new floor price is about $2,600. $2,600 per metric ton. And the premium is $400, which they want to pay to the farmers. I think the global markets they've come to terms with the fact that the Ivory Coast and Ghana are the two biggest players in the market, accounting for 65% of global output. If you have those two players coming together and working together in harmony and cohesion to affect the global market, you resign to faith that, okay, yes, whatever they plan to do and execute will have an impact. It's good for other cocoa suppliers. Nigeria accounts for just 3% of the global market. Obviously, cocoa prices should rise in the longer term. Right now, we're seeing the effect of dampened demand as consumers' pockets are hit. There's cocoa demand. Cocoa demand has fallen because chocolate demand has fallen. But in the longer term, as the global economy recovers, we should see increased cocoa demand, which should incentivize increased cocoa supply. So in the end, for a country like Nigeria, we still have impediments to cocoa planting. There's the inadequate financing. There's yield per hectare. That's still a problem. But all in all, if we can get, we hear that the federal government has, in a way, incentivized agri production by directing the CBN to increase credit to agriculture. So if we could de-risk the sector, increase credit to agriculture, to increase output and productivity, and over time, because cocoa is from the point of planting to the point of harvesting, it could take up to 4 or 5 years. So that's something that you do. It's a medium-term outlook, but if we can do that, it solves. You save on forex, you diversify the economy. There's jobs, and in the end,
also help bring down the inflation numbers.
Yes, food inflation, food security, food inflation, and then food sufficiency to the point that Nigeria can become a net exporter of agri-commodities in general.
Let's hope that happens. Anyway, since the inflation report was released on Tuesday, we have seen the stock market in the red. Is it that investors are expecting the Monetary Policy Committee to perhaps increase the interest rate next week?
Yes. Typically, when there's a hike, when inflation jumps up the way it did, it spiked by 40 basis points the way it is, you expect the Monetary Policy Committee to respond with hiking interest rates. And if you hike interest rates, it's not... You think
they will want to do that at this time?
The market is, from the market reaction, that's what it's seeming like, but it's unlikely. it's unlikely that the MPC will respond, given the problems with GDP growth and unemployment as well. You want to do as much as you can to stimulate the economy. So that is weighing on the stock market performance, as well as stocks being marked down for dividend at this point. So those two factors are the major factors driving the stock markets at this point.
All right, let's look at the commodities price movement. You talked about new yam price resistant to harvest effect. How so?
The harvest effect typically is an increase in supply. Increase in supply should drive down prices. But right now we're seeing that there's an increase in demand as the economy opens up. Now, we have some constraints in the planting season, constraints to planting, constraints to, because of movement restrictions and all of that. So you can only harvest what you plant. So you had output that was already hit, taking a hit. Then you have an increased supply, increased demand at this point because, institutional demand is on the rise as hotels and restaurants and institutions open up. So that increased demand is outweighing supply. So that's what's driving up yam prices.
Now, when you look at the week, how would you describe the domestic commodities market space, and what is your outlook?
We're seeing a rise in prices. We're seeing, and it goes back to what I said, the domestic demand, institutional demand, and as schools open, as businesses return, there's increased demand, and supply isn't matching that demand. So until we get that equilibrium or balance in the market, we'll continue to see prices trend up. And even as we enter the festive season, this is September, as we get to October, November, you have increased demand, and that will drive prices up. That's it.
All right, thank you very much, Nosike, for your time.
Always my pleasure.